One renowned retirement expert and former Goldman Sachs banker is stepping forward and revealing his number one way to beat inflation. It's a way to receive a nearly 10% yield from the government with virtually no risk. Folks who take the 3 simple steps he's sharing right now could receive nearly $1,500 from the US Treasury in as little as a few months. Best of all, it's guaranteed by law, and you could pay 0 taxes on this low-risk investment. Consider how rapidly inflation continues to soar. You don't want to waste any time missing out on the potential profits he believes are in store for this investment. To get a copy of his new free report with all the details, simply go to beatinflationreport.com. Again, that's beatinflationreport.com for a free copy of his new report. Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's June 21st, 2022, a beautiful Tuesday. A bit of a weird background. I'm sorry if this show is going to be a little shorter, a little weirder than normal, but that's what happens when you're on the road. And I'm here in beautiful Toronto, Canada right now, getting ready to head over to Collision, which is one of the largest tech conferences in the world. Estimated 35,000 people there this year. And it's the largest conference here in Toronto since COVID hit, so over 2.5 years. So super excited for that. Action-packed, all kinds of tech, investing information. I have my pen and paper out, really my iPad, but a lot of stuff ready to go. And I can't wait to report all the great things over the next couple shows that I find at the Collision here this year. So that is a bit of what we're going to talk about the rest of the week. But because I haven't gone yet, it's still early morning here on Tuesday. And so we're going to head over here in a minute. And once I get over there, we'll start reporting from live from over there. Potentially, we'll see how the internet is, because the internet has not been so great in this beautiful city. But what I want to talk about here today is we'll talk about the markets here real quick. I want to talk about Bitcoin, because obviously Bitcoin's taken a bit of a beating. And then a couple charts I'd like to show you. And as I talked about last week, I want to talk about a couple stocks that have been holding up fairly well. A bit of a maybe potentially defensive play, even though the market's rallying today. And I'm not quite saying anything. Here's a buy or sell recommendation. I'm not saying that you want to become defensive now. I think, if anything, there's a lot of great growth stocks that are opportunities at this point. But I'm going to talk about that a little bit as well. But let's jump into it here. I want to take a look at the market. Here's the S&P 500 here. As I mentioned, early morning here, about an hour into trading here on Tuesday morning. We have the SPYs, the S&P 500 ETF, about 2.55%. So big rally off a 52-week low that we hit on Friday. Obviously, hope everybody had a great long weekend, celebrated holiday yesterday. So we're bouncing off that. And people are starting to digest some news and realizing that a lot of this terribleness, if you will, has been priced into the market. So we're seeing a bit of a bounce there today. And we're also seeing that bounce also come into the tech stocks, and actually seeing a bigger bounce. So we have the NASDAQ up over 300 points. The NASDAQ 100, which is tracked by the QQQ, is up about 2.8% right now. Again, a little bit of a different chart. You can see on Friday, the tech stocks are actually up. So you're seeing the tech stocks kind of lead this 2-day rally, if you will, Friday into today. Again, very, very short term. Nobody's calling a bottom here. I'm not calling a bottom. But we are seeing some buying coming in, because I think there's a lot of opportunity out there right now. So again, maybe we'll just jump into this after I talk about Bitcoin. Bitcoin real quick, over the last few days since I did the last show, broke below 18,000, came down to 17,800. That spooked a ton of people. The amount of calls and texts and messages that I got based on that. Matt, what's going on? Matt, what should I do? And the thing is, folks, I want Bitcoin to go up too. It's not like I'm having it go down. It makes me happy. But I do look at Bitcoin, and I think they could have it a little bit lower in the near term. Just same thing the market. I think there's going to be some lower prices before we really take off to the upside. But when you do take off, I think it's going to be a great buying opportunity. So Bitcoin, though, has bounced back in the last 24 hours, back above 21,500 now. So if you can do the math there, you're about almost 4,000 off the low. And that's a big move. That's over 20% off the low. So we're seeing a big bounce back. Can it hold is another question. You're seeing a lot of the Bitcoin stocks move much higher this morning on that bounce back. So it's something to keep an eye on. But again, Bitcoin's definitely bouncing back nicely here in the last 24 hours. And I'm sure there's going to be a lot about Bitcoin and blockchain at this conference, which I'll keep you guys up to date on. So I just want to take a look at a couple areas that have been holding up, because I think it's important to, let you know what stocks have been doing well, because a lot of times we talk about the growth stocks and they have not been doing as well. So I want to talk to a few different areas and specific stocks that have been doing well. One is the defense sector, aerospace and defense. Obviously, when there's a war going on, which there is in Ukraine, between Ukraine and Russia, you're going to see typically the defense stocks do a bit better. Here's a chart of Elbit Systems, symbol ESLT. It's an Israeli company in the defense area, big into drones. You can see it's a great looking chart. I mean, over the last year, this has actually been up very big since a low in July of around 125 up to 240. We've since pulled back, but really, I mean, just a nice looking chart. So this is the type of company that if you're looking for something to potentially be a bit truly defensive, even though it's in defensive industry, no pun intended, defensive stock in your portfolio, this is one area you may want to take a look at. Believe it or not, you're going to think I'm crazy here, but the Chinese stocks have actually been holding up very well as of late. Some of the electric vehicle companies over there have been doing very well, while some of the EV companies here in the States have been struggling. Take a look here at Li Auto, symbol LI. I mean, this stock is trading near a high, as you can see here. I mean, it's back near the November high around 37. It's at 36.09 right now. It broke below 19 in May, and now it's back above 36. So it's had a huge move. And there's several others that are doing well, that are really doing well. BYD is another one doing well. NIO's really bounced back off the lows. So you're seeing the Chinese stocks. And there's another one, too, if you take a look at the Chinese consumer stocks, basically, what you have here, retailers, that type of stuff. There's an ETF, the Crane shares, China consumer leaders. Not the best looking chart you can see here. The symbol's KBUY, but you can see it's bounced off the lows, and it's now at a right here about a 2.5 month high. So again, not saying that at the bottom is in for any of this stuff, but the Chinese stocks have really bounced back recently. Again, you're seeing the consumer stocks in China at a 2.5 month high. So that should be telling you something that they're really holding on, and it's actually done well, really since the market has topped. So the market topped, a few months ago, and since that time, that most recent top, I should say, in the last month, the market's really pulled back quite a bit, and the Chinese stocks have gone the other way and they've gone up. So there's definitely something going on there. Another one is kind of looking just at niche areas that have been doing well, that people, regardless of how nervous you are about the world or the economy, continue to do well. And one of those areas is Formula One. I don't know if anybody knows anything about Formula One racing. I'm not big into racing at all. And really not Formula One, but Formula One is one of the biggest sports out there internationally. Liberty Media Corp is a company that owns a bunch of things, and their holding of Formula One is symbols FWONA. And as you can see here in the chart, it's around $55.50. But again, it's in a nice uptrend. It's off the highs, but it's in a nice uptrend. And I feel like this sport's only getting bigger and bigger. And that's going to be really important, I believe, for this company. And this stock looks pretty damn good. And again, it's a way for me to look at hedges for you, places to put money if you obviously you're believing that you don't want to be in growth right now. I think you should be buying growth personally, but there are other ways, obviously, and other areas to look at. Obviously, there's energy too. Energy's done very well, the energy stocks. If you're worried about gas prices, maybe you want to go buy some UGA, which is an ETF that tracks the price of gas. Keep in mind, this has run up a bit. You can see here in the chart, look how much this has run from early last year is around $32. It's at 73 now. It's above 80 for a couple of ticks about 2 weeks ago. But this tracks it, and it's up 3.5% today. So doing a lot of driving this year for the summer, and you want to kind of hedge yourself, maybe this is the way to go. So again, just throwing it out there, there's a ton of different ETFs out there that track different energy sources, whether it be natural gas, whether it be crude oil. There's a lot of different ones out there. Some of the ags have done really well. Agriculture, corn, wheat, soybeans. I've talked about that a lot. Some of the ag stocks, CF and Mosaic, both have done very well. Coffee's actually held up well, symbol JO, Joe. Some healthcare stocks, even though healthcare overall has been hit, holding up very well. Some of the consumer staples have held up much better than the market as well. Take a look at, for example, Kellogg, symbol K. You can see here on the chart for Kellogg, it's up today about 3%, but not too far from a yearly high, holding up much better again than the market itself. It's actually up this year, and the market's getting hit pretty hard. The US dollar, I talk about that ETF a lot, the symbol UUP. That has been holding up pretty well. You can go short bonds, you go short the market. I just don't think it's the best thing to do right now. You can also take a look at, if you want to look at tech, and one tech stock that's actually held up well, and it's really a dividend play these days, is IBM. And IBM now pays about a 4.9% dividend, and it's actually holding up much better than a lot of the other tech stocks right now. And you don't think of IBM as being, much of a growth stock anymore, and it's not really in the grand scheme of things. But as you can see here in the chart, it's actually not far from a multi-month high. Again, 4.9% dividend, so that's holding up pretty well there as well. So, there are places to hide out, is what I want to let you to know. And keep in mind that the market doesn't go straight down; it doesn't go straight up. So a lot of times, these types of opportunities that you see here, they're great long-term buying opportunities. The mistake that most people make is they wait till now and then they start shifting over. So again, I'm not saying you run into these. A lot of these stocks and these ETFs have really rallied already. So it might be a little too late. But I just want to kind of do a quick show here before I head to the conference. I want to get out there because I don't want to miss everything. But I just want to do a quick show and show you there are stocks that are doing well. So don't give up on the market. If these types of investments make you feel safer, then maybe that's what you should do. But overall, just keep in mind that I'm still very bullish on growth. I'm still very bullish on innovation. And I'm putting my money where my mouth is, and I own it. And I'll be buying more and more as the pullback continues. So I hope everybody has a wonderful day. I'm going to head out to the conference right now, get out there, jump in a car, get over there, and start doing some boots on the ground research for you. So I'm excited to do that. I'm excited to share everything I see, and I think there's going to be a lot of great stuff that comes of it. So I hope everybody has a wonderful day. We'll see you on Thursday. That was Making Money, and I'm Matt McCall.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.